Welcome everyone to the Kendall Report. It is Wednesday night. We had a live stream earlier today, and we have a lot of details to cover, and a lot of things happened in today's session, some of them very surprising. Before getting into tonight's video though, I want to continue to tell you about these indicators that I'm offering out to the community, and they're all everything that I use every night, the PPMs, the price projection tools, the market grid, all of that's available, but not just available in what I show on the screen. You'll have it for any symbol you want, any market. It's available on TradingView. You can use a free account to get them. Make sure you go to this link, kendallreport.com/indicators, to get signed up for that. Let's get into tonight's video. So as we look at what happened today, it was pretty phenomenal. We had a lackluster day. We actually started up and then traded negative for a while, but then we traded into the FOMC meeting report that they read after the minutes after the meeting, and markets started to act a little negative, and we traded off. We got a little spike and then traded down. We actually went negative. We traded down to 41.45 intraday. From that point, we were trading just around the 42 handle, so we traded way down. And then Powell started to talk, and that's when everything started to move. And there were a couple questions. His opening speech was not that big, but it was interesting. He sounded like he was the president of the United States, as he was telling us that, I want to talk to the American people first. We're doing everything we can about inflation, and we've got your back on this. Everything's going to be fine. We're going to make some moves here, and everything's going to come back in line. Well, certainly the markets bought into that, right? And then they said a couple things during the question and answer session, and one of them was that there is not going to be any 0.7 increase. That's not even on the table. And then he said the key words that got this rally to go, and it was soft landing. He said we're going to have a somewhat soft landing. I think he used another term other than somewhat, but basically it wasn't just we're going to engineer a soft landing. It was somewhat of a soft landing, and that's where the market started to go up. And there was a massive short covering rally. But listen, it was not just in the indices. It was not just the index traders. It was broad-based. I'm going to show you here in a minute. I'm doing this video a little bit later tonight, primarily because I wanted to get the information from our models once they ran after a big reversal and a big update like we saw today. Well, I've got the results, and they're pretty amazing. I'm going to go through them with you here in just a few minutes. But let's talk a little bit more about the Fed and their task ahead. Now, are they going to just stop inflation right in its tracks? Probably not. Is this the trigger to go to an all-time high and just rally straight up from here? Probably not. But it is going to add some stability in the markets from what I can see at the moment. So we're all responding to the very quick changes that happened today. And there was, like I said, relentless buying. Those of you that were in the live room witnessed that. And we couldn't even get a sell signal on any kind of minor reversal. It was just literally every 5-minute bar from 41.45 all the way up to 43.03 was where we went to. And I'll show you here in a minute in the technicals, but there are 3 levels. We had a 43.03.5, we had a 43.03.25, and we had a 4300 exactly today. So there's 3 levels there that are kind of setting there, somewhat ominous. Well, it looks like we'll be able to get through that, but we're just, it's amazing. I'm kind of baffled at what I just saw when I looked at the database. So let's talk about the whole inflationary scenario. I've talked about being around during Paul Volcker days, and this isn't Paul Volcker days, right? It's much different. The economy is in much different shape than it was. We had just come out of, Jimmy Carter had pretty much crushed the economy. That was why Ronald Reagan got in, and the inflation was big. So we had a bad economy and inflation. We had the stagflation. We don't have that at the moment. We still have reasonable, good, strong market, although not as strong as Powell would claim. He's acting as everything's fine. I checked just a little bit ago. We had a negative first quarter GDP, and we're maybe 2 months from getting into a recession. So the fact that he's claiming that we're going to be able to do this, the economy's strong enough, they're playing on the unemployment or the employment situation being so tight. We saw, the JOLTS numbers coming out yesterday, and they were way, there were still more and more jobs available. I think there are 2 jobs for everybody that's unemployed right now. Powell said something else. He said, I believe the participation rate is going to get better. He didn't say it in so many terms, but he said participation is likely to get better. More people will start to come in. Maybe that's the case. But even then, there's just a very tight labor market. We're seeing some wage pressure, all those things. One of the things I've been talking about, and I don't think anything changed from any statement that the Fed made today, was that we're going to see potential supply chain issues coming. He kind of alluded to there might still be a couple shocks to inflation yet, but he said there might be some surprises. Well, there's surprises maybe to him, or one of the jobs maybe of the Fed is to try to fool us and deceive and tell everybody everything's okay when it's not. And we'll just have to see exactly how this plays out. But just like they told us it was transitory and it wasn't, now they're telling us that, we're peaking out, but maybe it's not. I think there's a whole nother round. I've been talking about this. So that hasn't went away. But going back to what happened yesterday, the fact is that a lot of money came into the market in a broad sense. Like I said, I'm going to show you, suspense is building, I know, but I'm going to show you in a minute exactly how broad it was, and pretty phenomenal from my viewpoint, based on the database. And as you folks know, I'm always data driven, and when I see things like this, I have to pay attention, I have to acknowledge it, and it's important from the standpoint of the analysis and how things are likely to unfold. So I'll save most of that when we go through the data in a minute. But we had this whole soft landing thing. I don't know, folks. I'm not sure that's going to be the case. Only thing that I have to pay attention to is cash flow into the markets. Is it going to continue? Is there momentum? All those type of things. And that's what I'll be talking about as we go through the technicals tonight. I'm just looking at my notes here, and I really don't see that this whole soft landing thing is. I think that's probably right up there with the inflation being transitional in nature, right? Well, I don't think that's the case. I think we're going to continue these things happen. So let's talk just about a couple things. They didn't go through the details. We have 542 earnings reports coming out on Thursday. We've got the claims numbers expecting 182. Continuing claims, if they're below 1.4, that would be somewhat bullish or at least positive. And the employment situation and the labor is fine, right? We're at a 3.6. We're basically 2 days away. We'll call it 1 day away from getting the employment numbers. They know what they are. They're probably going to be fairly decent. This is why they had the posture and the confidence they have, and they're basing everything on that. Powell keeps telling us that they have all the tools necessary. They're telling us that everything is strong enough to take on these rate hikes, which the way they're doing it, I would argue he's right. I mean, we're still got a lot of stimulus in there. The fact is they're looking at running about $95 billion off a month of the balance sheet. That would take multiple years to get down anything really material from that standpoint. So there's still a lot of money in the balance sheet. There's still money out there. I believe Treasury spending is down about 30%. So we're seeing all this mixed picture here. But in the bottom line is when we see something like what happened today, you have to acknowledge it and see what happened. I thought we would get maybe 2 or 3 days up. That was the third day today. We did get an RTX sell. I'll go through all the details. So let's go through the database. I hope you're ready for this. So just like that, yesterday, we're at 14% bullish. We are now 42.91. We got 6,321 buy signals for tomorrow morning. That is a lot of buy signals. That's up there with one of the biggest runs I've seen. There's only, on the sell side, there's roughly 180 and change. Nothing going on there. This is a big, big number. And as we come in, depending on how we trade in the next couple of days, then I will be talking about what this means for the weekly run to see if we finally get some traction on the intermediate. One of the things that happened is we did get I'll save this for in a minute here, but I'll talk about it. We have had multiple signals that there's a potential bottom forming. Is it going to be a substantial one? Don't know yet, but this was certainly a big event here that has to be acknowledged. Whether this equates into the intermediate models coming back in, we'll see, but this is a big deal. I mean, you folks know the number I always talk about in a database. It's 42%. We went from 14.8 yesterday to 42.9. So we went from having, a couple thousand symbols long to 6,959 symbols is long. We're going to see that double. It's going to be up into close to 11, 12,000 here when we get the run for tomorrow. So this is going to be pretty substantial from that standpoint. Actually, that is the number. 69.59 is the number for today. It's already projected out, even though the trades haven't happened yet. So, but this is a big number. We went from literally a couple thousand to 6,900, and this is the raw data. This is not the what we call optimized data. So each one of our models are optimized by symbol, so it's probably a little less than that, but this is still material when we see this kind of bounce here. And there's just this is something that have to be looked at very closely. All right, let's take a look at the futures. They're down 475. We did get an RTX sell signal. What that is when we close above the market grid high. RXT yesterday is 42.81. We went out at 42.95, so we got that. Typically what we'll get is a move back into S1, S2, that's 68 back to 39. I talked about this as we came into the close with on the live stream earlier today. So this is very significant, and we should get a couple days sideways. Now we're probably going to have at least tomorrow sideways. That looks like it right now, but I want you to look at the PPMs. Last night, completely different picture. Everything flipped on a dime here. What we're seeing is PPM1 is at a minus 0.24, minus 0.25. So we're still in trend mode down. So there's going to be a substantial amount of resistance at the 21 period moving average that could come into play tomorrow. That number is 43.33 and R1 43.21. So R1, it looks very likely. S2 would fulfill this RXT sell signal and probably set up a little bit more neutral type pattern at least from just surging and getting 5 days up in a row. Anything's possible with the kind of surge we saw yesterday. But my point of what I just talked about in the going over the database is there was a broad-based participation for everything to be so negative yesterday and flip these charts and get buy signals. The buy signals have a couple things. I'll just tie this all together. They have a couple things for you to be aware of, is that when we get these buy signals, those are signals that there is a 30 to 50 day window where a lot of these symbols, I'm going to go with about 60% of these symbols, will be higher than where they are today over the next 30, 50, and these are trading days, not calendar days. So that's the month and a half. So all of a sudden, we just bought time. So much for sell in May and go away. We'll see how it all plays out. But this is just looks like we're going to at least consolidate here. We may go up and test the 200-day moving average in the pattern. That's up at 4470. That's a much bigger number. I'll be able to nail this down in the next couple of days. We'll see what happens. But basically, if you're a Wavetech user, follow the trades, especially the short-term trades. This is a significant event from at least a number of new trends on a short-term level that have emerged. And like I said, as we come into Friday, on Thursday night's video, I'll talk a little bit more about the intermediate models. But we look at this, like I said, probably R1, S2 would be the range, so we could see some pulling back. If they can get it, I'm going to show you these numbers I was talking about earlier. The high on 426, 4303.50. The high on 428, 4303.50. And then yesterday, on today's action on Wednesday, 4,300 even. So maybe we can take that out, but we still have that hard moving down on the 21 period moving average. There's going to be resistance at 43.33. And last night when I was talking to you, I thought we would stall at the 42.22 at the 10. It went right through that. But as we started to evolve in that last hour and a half, we started to see some of these indicators start to roll over. I want to show you something here from the standpoint. This is utilizing the PPMs on the trading view. These are the indicators. And I want you to look at this move through here. We actually basically got buy signals on PPM 1 and 2. And typically, I'll draw in what my expectations are here. The expectations are probably, are going to come back in. You still have this moving average, 10 period moving average down. This is down. The 40 is flat up here. So what we're likely to get is a pattern that's going to set up maybe a right pattern here, and we get this 1, 2, 3 pattern. This is something I teach in the live room all the time, and which swings us up to these extremes up here around the 200-day. But when we start to look at what's really going on with this pattern here, this is the upward bounds here. This is really, I'm going to cut off some of the bottoms and the tops, but this is basically, we spiked through it, but we're just caught in one of these zigzag patterns. I talked about this last night. Everything is in threes, and we're probably going to continue to see the threes in here and end up with a pattern that looks like this. But the PPMs still have a lot of work to do. If I clear this out for a second, I want to go just in a little more depth here. We had this PPM surge when we got over here, then we had another one over here. So this last one is one I want to point out. This is one where we went all the way up to the 46 handle, and then it was pretty much straight down. One little blip back to the 200, and then we got this. This low here was a slightly new low at 40.50. And I'm going to do one more thing and get through this as quick as possible. I talked about this in the live stream, but there's a lot of material there to look at. If I go over here and we put up the monthly chart real quick, this is the key. And you may remember me talking about the goal or the downside target was to move down to 21 month. This was going back January, February, and I thought, well, we get down there. The PPM 1 is still up at 0.92 on the monthly. I'm sorry, on PPM 2. PPM 1 is negative, so the extreme levels here are going to be 44.56, 41.47 is going to be basically the range we could start to set up next. And even though we've spiked down through these levels, what I was trying to anticipate going way back to the level that we were at in January, I thought we'd stay within that 48.18 to 42.12. Well, we expanded it all the way down to 40.50. We're expanding to the downside, but the pattern that we're setting up is really just this sideways pattern that is not likely, at least for now, to set up to go to ATH or all-time new high or see those patterns. There's still going to be a lot of chop in here, and it's going to take much more work to get through this. And I think we're going to have to see quite a bit of things happen economically, fundamentally. Everything has to come into play here. The technicals, from that standpoint, okay, there's support. Does that mean there has to be a big rally? No, it doesn't. Next market I'll look at is Nasdaq. Nasdaq, same pattern. Everything's very similar. The 21 period moving average is right now at 13,701. We have a high of 13,541 so far. We also got the RTX sell signal, so that's valid as well. PPMs, they almost look identical. The only difference is, and I was talking a bit about this last night, that the PPM 1 on the Nasdaq was just kind of holding in this pattern. Now we broke through first, second derivatives. So that reversal that we saw yesterday, this big uptrend, is typically probably going to have to be qualified as some sort of breakout. Whether we come back and test the backside of the 10 period moving average or not, that's yet to be seen. That would put us back at 13,244. That sets up sort of that right shoulder that I talked about just a little bit ago. All right, we'll go to the RTY, the futures on the Russel right now. Somewhat far-fetched. Yesterday, I was talking about maybe getting up to the 21, which was 1960. That seemed like a far way off. We got up to 1951. We're looking at it being flat. We did not get an RXT sell signal here on the Russell, but PPMs are much stronger. PPM 1 and 2 are still stronger, but still in trend mode down. PPM 2 at 0.23 suggests there's going to be a fair amount of resistance right at this 1960 level. The moving average there is 1969. If we look at just from a market grid viewpoint, what we're looking at is R1 is 61. So that lines up pretty good with those moving averages. So R1, S2 is likely, just because of the way the other indexes are trading. But if we break through this R1 on all of the indexes, look for at least an R2 print, which is a fairly decent number up, and we possibly could then end up having a close above the 21 period moving average, which then on S&P, on the Russell, and on the Nasdaq, all three of those, if those happen, then there's going to be more upside, and ultimately for most of these markets, we're going to try to head back above the recent highs and maybe head up toward the 200. As far as all the indexes go, what I'm going to say is that bottom is in place at that 40.50 on on the S&P, the lows on the Nasdaq. These are our lows. These are short-term lows. Thought we might get a bounce here, and the structure to this is really starting to look interesting from that standpoint. Next market, we'll go to interest rates. It was interesting. A couple of things happened yesterday I thought were very interesting. And the first one was that we did back off. There was no more surges in the 10-year. We actually printed up to that just a touch over 3%. Like I made comments in the last couple of days, I don't see this market ready to go over 3% yet. PPMs are starting to fade a little bit. We're still in trend mode. So the 10-period moving average 2.88. We close at 2.91. Probably look at 2.88, maybe down to 2.81 would be the maximum on the downside. We look at the market grid for Thursday, and that confirms that S2 2.87, S3 2.85, and the STX is 2.83. So that should keep us where we are likely to go. The interesting thing here is PPM3 is trying to roll over, and the formation in PPM2 is suggesting that we could soften even a little bit more. So what I wanted to show you is, let's take a look at the yield curve, and yield curve was able to steepen. So we did get back to 10 basis points over on the 530, and this pattern is starting to look like it wants to take out these highs over here, which would be at 15, call it 16. We get above that, then maybe we can start to move back up into the 20 plus range. And as I've said many times, it's super important to the Fed that we do not get an inversion and we stay there. And that's how they're, I'm sure, going to base that, whether we're going to end up in a recession or not. Whether we just get a downtick for this quarter and then markets kind of go back and we see positive third quarter, fourth quarter GDP, we'll have to see how this plays out. But they're going to play everything they can to keep it that way. And I think a lot of it's going to be based upon some of the situation going on in China, where they have the zero COVID policy going on, shipping channels, everything's it's completely blocked over there right now. Backed up isn't a good word, it's blocked. And then we're looking at supply chain issues, maybe more inflation. We'll have to just see how this story plays out. But we're definitely looking at, as I just pointed out, on the interest rates themselves, on the 10-year should start to pull back. We could see as low about 275 is probably going to be the bottom end if we pull back a lot, maybe 270, but I think around 275 will be that number. So we're going to get over here to the next market, which will be crude oil. And crude oil had a pretty positive day and continuing to be positive overnight. We're at 108. This is getting up above my 96, 106 zone. But there's something going on here that I think is significant. And this may be the big challenge for the Fed, is the reports out of the EU that they're attempting, they have to get all 27 members of the EU to ratify this, but they're attempting to block all Russian oil. And for the most part, on general, the EU gets about 25% of their oil from Russia. So where does that source get replaced? And I think a lot of what you saw in the crude oil market on Wednesday, what you're likely to see going forward, that's going to continue to be driving this market. And it's possible for the market to get overheated again. There's current Fibonacci projections here right now And let me bring that up on screen so you can see it. I'll go full screen for you. Current Fibonacci projections are for a move to the 112, 118, 122. So that is definitely where we're likely to head into that pattern. And if we get up there, then we can start looking at some of these weekly patterns that are set up here. Going over to weekly, we're still within this. This is basically what I call a dragon head formation on this. And typically, dragon heads resolve themselves to the upside, and ultimately maybe a retest of 130.30 is going, 130.50 will come into play. Let's see if that's, I've got the high right. Yeah, actually 128.60. I thought there was a 130 number. I think it was a different number on a nearest futures contract. But the bottom line is we could easily see that old high tested. Next market I'll look at is gold, and this is the weekly gold. We managed to bounce yet again. I mean, gold looks like terrible, looks like it's going to go down. We hit these major support. 1846 is the 40-week moving average. We bounced off of that. We actually closed at 1900. Pretty amazing, up 1.72, up 32 on. So let me just go over to the timeline and go to the daily, because most of this action is coming up overnight here. So all of a sudden we're back at 1902 high. The RXT number on gold is 1904 for today. PPM's all flipped as well. So it looks like, at least for the short term, stock market, gold wants to go together from that standpoint. And so going back to the weekly chart here, what we're seeing here is a configuration that we could get back. If we can stay over 1887, then we're looking at 1887, possibility of trading up back to 1930, 1940 from that standpoint. So look for that market to continue to stay stable. Got to hold that lower number I just talked about at 1880. So the final market I'll cover tonight is Bitcoin, and Bitcoin is still got these upward Fibonacci numbers. I talked about this in the live stream today, but we've still got things starting to turn up. PPM1 at a plus 0.45 all of a sudden. So this move up 4.32%, up 1,600 bucks, 39,642. We're looking at the numbers on a weekly basis. 41,375 was R3, and I'm sorry, yeah, 41,375. So we haven't quite gotten there. 39,514 is R1. We did print above 40,000. So look for R2 possibly. If we get through that, then we could see an R1. And this is a weekly Bitcoin. When we look at the daily, you're going to see I'm going to blow this up just so it's a little easier to see. We did get an RXT sell signal here, and this suggests that we're going to challenge and maybe close above the 21 period moving average, 39,807. If that happens, next number is around 41. We'll call it 41.2 to 42 even, 42,000 even. Okay, folks, that's going to do it for tonight. As I told you earlier, make sure you check out these indicators. I'm going to be doing a number of follow-up videos here on how to use them. Also, you get access to our live trading room, and the link is right here on this page here, kendallreport.com/indicators, and sign up. You get a full month in my live trading room. Look forward to seeing you folks there, and look forward to seeing you tomorrow night here on YouTube. Thanks again for watching. I really appreciate it.